welcome to a new episode of the Insilico Terminal podcast. Today my guest is trader Mercury, and I would like to ask you to introduce yourself in case people might not know you. Who are you? What do you do?
So I've been trading crypto since late 2017. I am primarily a swing trader. I got absolutely humbled in March 2020. Previously, I was very arrogant, egotistical, and I was what I thought to be very good at trading because I managed to like 5 or 6x my portfolio. And then March 2020 happened, and I pretty much lost everything. And ever since then, I've just taken a much more passive and balanced kind of approach to markets with a very level-headed philosophy. And I'm kind of known as like the objective TA guy. I'm always going to tell you what the truth is and not what you want to hear. And yeah, I've done incredibly well, just kind of, submitting to the market and following trends, knowing when to pick and choose my battles wisely. And yeah, I've managed to create a lot of good things for myself and the people around me in the past 6 years.
How did you get started in crypto?
You know what, man? It's really funny. I was scrolling Twitter one day and I saw an ad for Ripple for XRP.
Really?
Yeah. And I was like, ooh, what's this? But yeah, so in that 2017 market, man, it was very much mania. I actually got interested in like October and I registered for like a Binance account, but they were so backlogged with all the people that were registering that you had to wait 2 weeks just to even get your actual account.
Yeah.
So I didn't actually get access to trade crypto until November. But yeah.
So you just like bought XRP?
Oh man, I bought XRP, I bought Verge, I bought a lot of coins that don't exist anymore. I bought Stratus, I bought Dragon Chain, I bought everything. I still have some of those bags today, ironically, if I like go log into that Binance account. But yeah, and I watched everything pretty much do like 4, 5, 6x in the span of like 2 weeks because I joined like right at the pinnacle of like acceleration of the mania.
Yeah.
So it was just very, bonkers, for lack of a better term. And then everything just went negative 90% lower. And like I said, I still have some of those bags today, like that Verge bag. It's worth like not even half a penny today or whatever. But yeah, I still, I just watched everything go down negative 90%. And that's actually what drew me into crypto was I figured that if somebody was able to, or if I was able to run up a big balance, then that means that somebody was able to run up a big balance, but actually keep it. And I was like, I could be that person. And so I just kind of put my head down and grinded. Through all of like 2018, 2019, I spent 12 to 14 hours a day staring at charts. That GCR advice, like sacrifice your weekends, man, I was doing that before he made it cool. And, but really though, maybe this is a good topic, especially in today's market. I really drew down my mental state. I pretty much capitulated every single, social life aspect, all my friends, eventually at some point, your friends ask you to come out on the weekend to go to the bar, like whatever, right? And or just go hang out, party, whatever. And you keep telling them no, they're going to stop asking you, at some point after 2 years. So, but no, man, I was incredibly, I was in great shape. I was an athlete. I'm only 26 years old. So 2018, I was like 18.
Yeah.
But I was coming out of high school. I was a really, good athlete. And I just lost all of that. I didn't get fat, but I got the opposite. I got skinny. So I just lost all my muscles. I mean, I was down bad, man. I was down horrendous, but my portfolio looked good. And, I think there's something to say about that. That experience really did exponentially accelerate the learning curve phase for me because I was able to pick up on a lot of like trading skills very quickly. I basically compressed like 2 decades worth of trading experience into the 15-minute chart on, over the span of 2 years.
Mm-hmm.
So that was, something very valuable that I was able to extract from that, and just getting familiar with clicking the buttons and, taking losses, flipping buys, etc. But, at the end of the day, if you had to ask me, was it worth it? I would tell you no. I don't think it was worth it. I think there was
That's a
better ways to
good
do
message.
to still achieve, to still accomplish, the same kind of goal. Maybe not to
Yeah,
exactly the same extent, but
more
for the most
balance, I
part,
guess.
yeah, and not nearly as many sacrifices.
So you came like straight out of school into full-time trading, basically?
Yeah, I went to college for like, I don't know, 6 weeks, 8 weeks, like 2 months
Mm-hmm.
maybe, and I dropped out. I was like, this isn't for me, and there just wasn't anything that could really grab my attention for a
Yeah.
long period of time. It's not that I thought that I was too smart or anything. It's just I just wasn't interested, and I just felt
Mm-hmm.
like I was going into it in like a finance kind of career like background, and with that in mind. And then I was doing these classes that had absolutely nothing to do with that, and I was like, this is really stupid. So
Mm-hmm.
it just wasn't for me. That's actually why March 2020 was so like mentally breaking for me,
Mm-hmm.
because it really set in this idea that I had just wasted the past like 2.5 years of my life.
Yeah.
Man, it really, that does something to you. Even when you're 20 years old at the time or whatever,
Yeah, for sure.
and you still have your whole life ahead of you, it's still a massive setback. And that was rock bottom. And ironically, what I can tell you today is that was the best thing that's ever happened to me, is getting humbled in March 2020.
Mm-hmm.
Yeah.
What did your trading look like in these years from like 2018, 2019, when you spent all your time on it, when it made you think you're like the best trader in the world or whatever? What you mentioned you looked at a 15-minute time frame. What kind of setups were you looking for?
Yeah, the 15-minute time frame was like my best friend. I was primarily looking for like range setups, ironically. Nowadays, I primarily trade trends and I typically avoid ranges.
Mm-hmm.
And back then it was the opposite. I was only doing well in the market because I knew how to trade the chop back and forth. And then every now and then I would get lucky in the sense that I would allow a trade to run beyond the range, and then that trend would persist for a prolonged period of time. Especially like 2019,
Mm-hmm.
there are a lot of like 15-minute ranges in that 2019 like rally, where Bitcoin goes from like 3,000 to 13 in the span of like 4 or 5 months. But every single one of those 15-minute ranges, I would trade it back and forth, and then I would just hold that long into like the range high breakout. And then that was the only way that I would actually be able to find myself long throughout any kind of trend, because I
Mm-hmm.
wasn't familiar with trends. I was so fixated on trading those lower time frames that I'd gotten really used to getting in and out of positions. But I also had people in my ear telling me, like, you need to make sure that you're not over trading, and that you're making the most out of these trends, because
Mm-hmm.
you're probably going to extract more by doing less. And I did take that to some degree, but that was the only way that I was actually able to apply that kind of mantra, was just like allowing trades to run beyond the range breakout.
Mm-hmm.
But yeah, back then, dude, I was using name an indicator. I was using it. Like I was using relative strength. I was using stochastic RSI. I was
Yeah.
using moving averages, but I wasn't just using exclusively like 200 MA, 200 EMA like I was, or like I am now. I was using every moving average: 11, 21, 50, 55, 100, 200. I mean, yeah, it was
Like
absurd.
all at once, or you like cycled through
All at
stuff?
once, man. It like, those like memes that people post on Twitter, and it's like a chart and it's all scribbles, you can't even see the price
Yeah.
action. That was how I traded. Yeah.
Interesting. So that's when did you move away from that? Did it take like the COVID crash to bring you back to your senses and remove the indicators, or?
Yeah, it absolutely did. The COVID crash is what humbled me. And so the COVID crash is a myriad of things for me, because it was a humbling, but it was also like a revelation at the same time. I was so egotistical because I had actually done incredibly well. I had managed
Mm-hmm.
to pretty much like long every single bottom, short every single top to like an uncanny precision. And, I just thought I was the GOAT, like greatest of all time.
Mm-hmm.
And so when you're coming off of like a 15 win streak, in terms of like major trades, not to say that I had a 100% win streak, but like the trades that mattered, right? these like high conviction, big balls kind of bets. When that's what you've gotten used to, it's really hard to ever kind of fathom that you might be wrong.
Mm-hmm.
So heading into March 2020, my idea was to sell 10,000. I think I might have actually shorted it. I'm not sure. But then to buy back around 8.2-ish and just like right off into the sunset for like the next 3-year bull market. I was like, I've made enough, and we're gonna bottom right here, right now, and for the next couple years, Bitcoin's gonna go to 100,000, blah blah blah, and I'm just gonna make a ton of money, and now I can just ride off into the sunset. Past like 2.5 years of my hard work, and I was ready to essentially like retire, right?
Mm-hmm.
I was like, ready to take the more passive approach and stop grinding. And yeah, and then I watched the trade go against me. And that's the thing about it, is like, a lot of people will tell you that, COVID was a black swan event, and it wasn't. It wasn't a black swan. I actually know a lot of people that were able to predict the kind of effect that was going to have on the market before the market actually priced it in. So not only did I watch people contradict that in real time, but I also watched myself in hindsight. Obviously, I was able to look back and say, it's not like this thing ripped off on Band-Aid all in one hourly candlestick, like October 10th, right? That's genuinely a black swan that just came out of nowhere. Nobody can possibly predict something like that's going to happen. Whereas, March 2020 was more of, I watched myself wake up the next day, look at my positions, and I would be underwater. And then I would go to bed. I wake up the next day and same thing. Wake up the next day, same thing. Wake up the next day, same thing. It wasn't something the market did. It was skill issue. It was, I couldn't cut a position. So after that humbling, essentially I got liquidated for a portion of my account, and a lot of it was just spot drawdown, because you have to remember, like, 2019, 2020, USDTs, perpetuals are not popular at all. And even if they are, created on most exchanges at this time, they're incredibly illiquid. There's not really much incentive to actually go and trade them. So everything that I had was pretty much denominated in Bitcoins. I was, at times I would be, 150% exposed. By the way, I was also 19, 20 years old at this time. So people would tell me, hey, you're young, take lots of risk. And I would say, oh, okay, I'm going to go trade with 100% of my net worth then. So 100% of my portfolio was 100% of my net worth. And so, yeah, I got liquidated for a portion of it. Most of it was just spot drawdown. But I mean, it has the same effect. And after that happens, man, I looked back and I reflected and I said, how do I make sure that this doesn't happen ever again? And that was like I need to cure causes and stop trying to remedy symptoms, because, I went on this like crazy sun run basically for like 2.5 years straight. I'm coming off of, 15 trades in a row, 20 trades in a row, where like the big banger trades, I'm impeccable, like 100% hit rate. And then one trade causes me to lose it all. So clearly, if that has the ability to happen once, then that could possibly happen again. How do I make sure that I don't allow the next 2.5 years to go to waste? Because I know that I can run it back. I know that I can get it back. And my dad came into my room at the time, and he goes, background story about my dad. He's an immigrant, moved to a new place with absolutely nothing, and built, several businesses, was a serial entrepreneur, built a ton of businesses, most of them unsuccessful, but some of them successful. And at some point when I was about 13, 14 years old, he had a bunch of successful businesses that were like, multi-million dollars. Previously, prior to that, we grew up incredibly poor, but my dad had finally made it. And then we lost everything, and he had declared bankruptcy. So this guy, I mean, he ran it up way more than I ever could have possibly imagined, at that age. And he walked into my room and he said, "You're crying over money?" And I go, "Whoa, wait a minute, hold on, you might be onto something, like, dude, when I tell you I was a corpse-like version of myself, I was a corpse-like version. Like, I did not get out of bed. This might sound gross, but like maybe I would brush my teeth at like 6 p.m. Like, dude, it was bad. It was really, really bad. I was down horrendous. I was depressed. I feel like, it wasn't just a portfolio thing. It was a life thing, right? Like I had put all my eggs into this basket, and I didn't have the ability to go and get more eggs and create a new basket. Like I didn't have that ability. My uncle, who hates Bitcoin, then to rub salt in my wound, tells me that he bought Bitcoin at 4,000 just because. And I'm like, dude, my uncle who hates Bitcoin bought my capitulation if if it weren't already bad enough. But yeah, so my dad came into my room and he goes, wait a minute, what's going on? Like, why are you, not you? Why are you so depressed? Like, I haven't seen you in 2 days. And he's like, and I'm like, I tell him what happened. He's like, you're crying over money? So I figured, man, if he has the ability to say that, and he lost way more than I could have possibly imagined, and he lost it, middle age, and I'm still incredibly young, right? I have the ability to run it back, then surely I can run it back, right? Like surely there's not actually a reason to, be able to justify crying about money, but I had to be able to develop a new approach, a new style, a new strategy to make sure that I can embody that like mantra of I will never be allowed to cry about money again. The only way that I'm not going to be allowed, it's not like I'm Marcus Aurelius, right? I'm not this like crazy stoic dude. The only way that I'm not going to be allowed to not cry about money is to ensure that I don't take a big hit like that ever again.
Yeah.
And so curing those causes instead of trying to treat the symptoms. And that's where I basically just started from complete scratch, got rid of all the indicators, basically just said, you know what, ironically, like people ask me, how did you start using 200 MA, 200 EMA? I'm not going to take any credit for this, but I'm just saying, man, when I started using both moving averages, EMA and MA 200, I was told that it's incredibly obscure, it's weird, it's odd, and now I see a bunch of people using it. Just saying. But no, I started doing that because I wanted to figure out which one would I actually use. And so when I asked people, which one should I use? Should I use MA or should I use EMA? Some people would go, oh, use MA. It's, it's the more popular one. And some people would go, no, use EMA because this is crypto. So it's going to catch up faster. So it's going to be more reliable. And I was like, okay, this is pointless. So I'm just going to throw both of them on the chart and see, which one I like more through forward testing. And what I found is I kind of really, really enjoy the ability to express something more generally and more broadly. And I kind of use them as a cloud now to represent something of which I already understand. So this is where people kind of like get me wrong. And when you look at my charts nowadays, you see a bunch of black and white and gray. And then you see something that sticks out like a sore thumb. It's this green and blue moving averages. And people automatically assume that I'm a moving average trader, but I don't look at it like I'm a moving average trader. I look at it as I'm a trend trader. I'm a momentum trader, and moving averages just so happen to represent the momentum of which I already understood, because a 4-year-old understands which way the market is headed at any given time, right? You can look at the chart and we can make more detailed kind of breakdowns of that chart and of that general direction through things like market structure. So if you were to ask me, what's the foundation of your system? I wouldn't tell you moving averages. I would actually tell you market structure. And it's just this like embracing this idea that, you do know what's happening on the chart at any given time because a 4-year-old does. And so you need to be able to express that and just kind of do your best to trade the market objectively and respect trends, essentially. That is the foundation to the entire trading principles that I built off of since then. Just respecting trends.
I feel like you might offend a lot of people by saying 4-year-olds can.
Man, it's the truth. If it's the hard truth, then it's the hard truth. But the reality is, man, if I were to ask my little cousin who's 5 years old, which way is this market headed at any given time? If I circle out, and it goes by time frame too, right? Like if I circle out the hourly for him, he's gonna be able to tell me. If I zoom out a little bit and circle out the 4-hour, he's gonna be able to tell me. And same thing. So it's that like expression of the market is always right. It's so ironic to me. People, I still get projections. Oh, you're so egotistical. You're so arrogant, blah, blah, blah. But I'm over here like, dude, I'm the person that is saying, I don't know what the hell the market wants to do. The market's going to do whatever the hell it wants to do. So I should probably just subscribe to that. And to me, that is the epitome of humility. That is like, screw what I think. The market is always right. And it's so ironic to me that same person will tell you the market is always right. is the same person that'll tell you, after we break out of a range, no, it's not a breakout. No, it's not a higher high. It's a sweep of the highs. It's a fluke. It's a fake out. It's a bull trap. It's this. It's that. It's like a lot of the times, if you just end up, respecting whatever the market's doing, you find yourself better off long term.
Yeah.
Now, this is where, something like social media and the best way to attract like engagement and following and stuff like that on social media is totally inverse from how you should think about trading philosophy, because you're like, in terms of engagement, right? If we break out of a range, or let's say if we break down below a range, this is genuinely how you engagement farm. We break down below a range. The best way to attract engagement is by creating hope in people's minds. So when you break down, I'm being real, man. When you break down below a 2-month range, right? And the obvious analysis is, okay, that was fuel, right? So 2 months of fuel, and now we're reversing the trend. So we're probably going to continue lower thanks to, 2 months of consolidation. And now sellers are probably going to be more persistent. The best way to attract engagement, though, is by creating hopium and saying, no, this is a sweep of the lows. This is a fluke. This is a fake out. It's going to be a deviation, bruv. And we're going to, reclaim that range low. We're going to skyrocket to new all-time highs, right? The like risk reward in terms of your trading portfolio for actually trading it that way is pretty low. Like, it's really, really bad, because you're more than likely over time, you're going to be proven wrong. And the few and far between times where you are actually correct on that idea is not going to be enough to overcompensate for the times that you were wrong. But if you do that from like a social media standpoint, if you just so happen to be right about that specific event 1 out of 10 times, now you fooled everybody into thinking that you're a genius. So it's like, there's a direct inverse correlation between, if you are going to prioritize trying to engage in people's like initial biases and instincts, because the reality is nobody wants to log into crypto every single day and hear about how crypto's dying and how the market's going lower. Nobody wants to hear that. I don't even want to hear that, right? But that's the truth, and it has been the truth for 4 months now. Like, it's just been, that's the trend. So the way that you want to actually approach trading is just very, very different between, how you're going to farm engagement or something like that.
I was just laughing about it because I kind of like sometimes to stir the pot a bit, I guess, by posting exaggerated market opinion. I think that's kind of like one of the funniest things about being on Twitter is just like the sentiment mirrors the charts. So the most interesting days are always when there's like a big red candle or a big green candle, and everyone is like extrapolating from that, and then either you're euphoric or you're like all doom and everything is going to zero, and it's just funny to like exaggerate and then participate a bit in that.
Yeah.
In my opinion, at least. Maybe I'm like mentally ill, but it's
no,
what I enjoy.
No. I mean, we all trade crypto, so.
Yeah.
No, it works in the inverse direction too, though, and it's pretty funny because like people don't see the hypocrisy in like that exact same example, but then that same person will go, "Oh, here's this grifter, scammer, LARP that is always bullish all the time, every time. Now we're breaking out of a range, but guess what? They're bullish, so this can't possibly continue higher." And it doesn't make any sense, right? It's not just like other influencers or like peers or friends. It's like people that I talk to just like on a day-to-day basis. They come into my Discord chat, stuff like that. We can be in a raging bull market and, in the middle of price discovery, and somebody will go, "Oh yeah, but blah, blah, blah person is, bull posting at the, top of their lungs and screaming about how this market is going to, how Bitcoin is going to 1 million, blah, 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 will be at like $80,000 Bitcoin at the time." And it's like, you're contradicting yourself. You are overcomplicating the market. You are giving too much merit to something like social media, where directly the best way to farm engagement is to constantly post, hopeful thoughts where you're telling people that their bags are going to go higher, that they're going to make it, that they're going to be able to afford a private island, right? That's always going to be that, incentive. That incentive is there whether we're going up or down, regardless. So if you're always going to use that as a counter trade signal, then what you're doing is ensuring that when those few and far between periods in the market that are incredibly lucrative and actually resemble a bull market and what we're here for when we come to trade crypto, you're making sure that you handicap your gains for when those periods come. But you're still going to have to endure the 8 months of chop. You're still going to have to endure the 5 or 6 months of underperformance severely to every other market. You're still going to have to endure the bear. You still have to endure all the same hardships, but you're not actually yielding anything from the good times, which are 2080, right? If you look back at the past 3.5 years, man, there are maybe 7 rallies that actually matter. Everything else is bullshit.
Yeah.
Everything else is a 3-month range, an 8-month range, a 7-month range, 3-month downtrend, 8 months of underperformance to the stock market. It's absolute garbage. That's what it is. 80% of the time. The reality is it's always been that way. People just don't want to look back at history. So you have to make the most of those opportunities, and you can't really give too much merit to social media.
Yeah, for sure. I think you definitely notice that over time. It's just I love it. I like looking at it, but it's also just like very distracting. I want to ask something because I want to better understand when you talked about losing a lot during the COVID crash, and then taking away from that how you improved your risk management so that it wouldn't happen again. I also wanted to ask a question if there's like, what did your risk management look like before then? Or were you just like so lucky all the time in a row that you didn't really lose a lot at once? Or like the market didn't move that much that it made you lose that much? Or how did it not happen before?
Even though I was a degenerate in the sense that I was trading with 100% of my net worth, and I was always pretty much always like 100% exposed to the market, because I was always holding like Bitcoin or maybe like Ethereum and always trading inverse perpetuals. So I'd have to hold the underlying asset as collateral. Even though that was the case, I didn't really use leverage that much. So I didn't really have the ability to get liquidated because I would find myself on incredibly low time frames, but I was not the person that was trading like 20x leverage, 50x leverage, 100x leverage. Like I wasn't doing that. I would maybe use like 2 or 3x, and most of my trades were incredibly low time frames, so I would be in and out around those times. So yeah, it wasn't like I had never actually been liquidated until March 2020. That was my first like real liquidation. Yeah.
So it was just like the size of that move, or the outsized volatility that kind of fucked you over.
Oh yeah, and it was also the ego, right? The ego was inflated. The ego was parallel to my P&L. So as I made more and more money, and I continued to prove to myself that I was the greatest of all time, then I thought, well, shoot, I'm the greatest of all time. And when I look at my P&L, it doesn't disagree. So it was like, not only like, I mean, I was genuinely hell-bent that I was going to be able to buy $8,000 Bitcoin.
Yeah.
At the time, I don't know if you remember, if you were here, Willy Woo was like screaming about how Bitcoin would never go below 6,000 ever again. And his fund that he made with Murad, ironically, and all that, and they blew up because of, Willy Woo's analysis and whatever. Yeah. It's funny, I actually have a friend that worked for that fund and was warning them that, they were going to get liquidated, and they all just wrote him off and ended up firing him, obviously, because the fund blew up.
Yeah.
But yeah, man, it was just like this crazy conviction that I knew everything that the market was going to do before the market was going to do it. It was because I had proved that to myself up until that point. So that was a humbling, man. And that was severely needed, because that is not the right mindset to take with you into markets. That is essentially like even though I was able to compress, a ton of trading experience in the span of, a relatively short period of time, that is essentially the equivalent of me getting into the ring with Mike Tyson, and I've never thrown a punch before, and being like, I'm going to knock this guy out. It's like, it's just crazy.
So how did you change your system afterwards? How did you, you removed all the indicators, you practiced better risk management, you started to look at the market differently. How did your trading evolve from that?
Yeah, so I started using indicators again. I would slowly re-add them into my system. So like something like RSI. And but what I would find is it's very contradictory to the principles that I was trying to instill within myself. It was
Mm-hmm.
very contradictory to the premise of I'm never going to be allowed to cry about money ever again, because I was actually coming out of that March 2020 COVID event. I then had a vendetta against the market. So
Yeah.
I was actually revenge shorting around like 4 or 5 thousand or $6,000 Bitcoin.
Mm-hmm.
Um, and thankfully I had people around me at that time to tell me like, dude, you're revenge shorting. Like this was the generational bottom. Like it doesn't get worse than this. If you're thinking that the market's gonna be like crazy doomer from here, you're wrong. Look back at history.
Mm-hmm.
These are the emotions you're experiencing. Trust me, I've been there before. Like, and they were right, and I was like, shit, they're right. So I had to get out of that and start to like embrace this idea of like, how can I make sure that if anything happens, whether it's the market, Bitcoin going to 1 million or the market going to zero, how do I make sure that I'm not caught off guard? And the
Mm-hmm.
only way to not be caught off guard is to be very adamant that that is what's happening and potentially going to happen on the way into it happening. So respecting trends. So I'm like, okay, I need to be a trend respecter. I need to just
Mm-hmm.
follow wherever the market's going. I need to be very objective. I'm not allowed to counter trade. I'm not allowed to continue revenge shorting, right? An aggressively grinding upwards kind of market that's just like eager to find its way to higher highs, coming off of a major capitulation event. I don't want to
Mm-hmm.
do that anymore. So I would, I started bare bones again, implement something like RSI, but then what you realize is like bear divs on RSI are totally contradictory to momentum trading strategies. It doesn't really make any sense. If you ever see a bearish divergence on the weekly RSI, what that means is we failed to hold a bearish divergence on the 3 day. If you ever see a bearish divergence on the 3 day, it's because we failed to hold or express or play out a bearish divergence on the daily. If you
Mm-hmm.
ever see a bearish divergence on the daily, and you can keep fucking going, dude. Like, so it starts on a 15 minute, then it goes to an hourly, and then it goes to a 4 hour, and then it goes to a daily, and then it's 3 day, and then it's weekly, and then it's 1 month. And it's like, dude, at this point, a whole bull market's passed me by, and I've been making the same argument from before we went 500% higher.
Mm-hmm.
It doesn't really make any sense. So I scrapped that, and that was the same kind of thing that I did with every indicator. So it was
What exactly do you mean by that? I don't know if I follow.
so like the only way to actually express or trigger a signal on like a weekly bearish divergence is to have false positive a signal on the 3 day chart.
Mm-hmm.
And the only way for that to have developed is to have created a false positive on the daily and then a false positive on the 4 hour. And so it's false positive, false positive, false positive, false positive, false positive until eventually it works, until eventually
Mm-hmm.
that divergence kicks in and plays out and the market sees that more aggressive sell off from like a more extreme point. Like and you can, throw RSI on the chart. It's so easy to throw RSI on the chart and say, here are all these bearish divergences that played out. But then every time that you do that, you are overlooking all of the ones that didn't on the way into the one trigger that actually played
Mm-hmm.
out. So, like, it's the exact same thing. If you're using RSI, but you're not using divergences necessarily, and you're explicitly using something like overbought and oversold more traditionally, more like, linearly in terms of, instead of divergences.
Mm-hmm.
Um, you go look at any bull market period or any bearish period in the market, you'll notice that the signal fires overbought for an extended period of time. Because it's always overbought relative to the previous market that we were trading within.
Mm-hmm.
So it's like, if we're trading in a range, let's say, then the RSI indicator is going to be gauging relative strength based off of the default is 14. So it's going to be going based off of the past 14 candlesticks. So if we're trading a 2 week range and you're looking at the daily, you're going to be seeing, the RSI is going to be flatlined because it's always gauging relative strength relative to the range, right?
Mm-hmm.
Because we're in a compressed range. As soon as we break out of that range, now that RSI signal is calculating that day's strength relative to the range. But then maybe the range breakout adds fuel, and then we, fuel a greater move and blah, blah, blah. So immediately the RSI is now firing a signal that we are overbought.
Mm-hmm.
But go back and look at history and see how many times have we broken out of a multi-month range and then continued another 50, 80, 100, 300% higher, especially on these altcoins, right? So what that means is inherently it is destined to be so. It is statistically calculated so that every time that happens, it is always going to be firing overbought the entire way through for that entire trend. And at some point, there's going to be divergences that develop because let's say like momentum stalls after a 50% range high breakout. So now RSI has peaked because it's gauging relative strength relative to the range.
Mm-hmm.
And then we stall sideways. So now the relative strength based off of the previous 14 candlesticks that were incredibly vertical is going to be lower, but price is simply consolidating. So now there's a divergence that fires on the hourly chart, right?
Mm-hmm.
And then price continues making another higher high, but the relative strength throughout that tiny little bit of consolidation, which has acted as a rocket pad for the next leg higher, is now a lower high in RSI. So now there's a divergence. Mm-hmm. And then that same thing happens on the 4-hour chart because the market stalls for a week and then it just keeps going and it keeps firing these false positives.
If you use a signal like that to, like, you see the divergence and then you would short, for example, if you see like the bear def and you would say, hey, this is the market is going to go down now.
I'm sorry, say it again.
Like you're saying that you're seeing the bearish divergence on the RSI,
mm-hmm.
and then you take that as a signal that you should basically short because the market is like losing steam and you should go down.
That is the signal. That is the implication of the signal. It's weakness. It is reversal. So it's like, if you go look at like the SPY chart is probably a good example right now.
Mm-hmm.
You go look at SPY, I guarantee you there's a divergence on the RSI because it's a parabolic chart, but as of the past few months, it's gone sideways. But what you don't realize is if you zoom inwards to lower time frames, you're going to see a bunch of signals or bearish divergences that developed on the way up before that sideways even got created.
Mm-hmm.
And they never actually came to fruition. So now they've just kind of expanded and gotten magnified, so they've gotten carried over into the daily. And a lot of the times RSI is a tricky indicator, especially because a lot of the times it actually covers its own false positives. So it'll print a false positive and it'll be a lower high in the RSI at the time, and then it'll eventually find its way into a higher high in the RSI to be in agreement with the higher high the price action also made. So then it kind of like, brushes its own false positive under the rug. And this is why, like, again, this is an indicator that if you actually were to like backtest, and again, because it has that kind of like dynamic where it has the ability to brush its own false positive under the rug, you can't really backtest it. But even if you backtested it, you would see that it's incredibly poor. I mean, it's terrible. Pretty much any aggressive uptrend, go look at the stock market, that move that NVIDIA had, aerospace as of recently, silver, metals, right? It's always going to fail tremendously. And then it's going to signal that one signal. And of course, that signal is destined to be at the exact pico top. So it's an incredible engagement bait. It's a great way for people to post about, here's this indicator, here's how you could have had a crystal ball, and then it acts as bait, and you have to figure it out for yourself in real time as to how that indicator actually doesn't work, so that you can actually start to attribute, some kind of way that it works. The people
I feel like in that specific case, it's kind of because RSI is a bit misunderstood as far as like I understand it, at least for like how it's used for these engagement bait things. Because I think I used to understand it that way as well at first, but it's kind of, if it's a momentum indicator, like if it's overbought, that actually just means the momentum is like very, very strong. So there's like no reason that you should fade that just because it's like overbought statistically or whatever. And also like the same with the divergence, it basically just means that momentum is fading, but that doesn't have to mean that the market is going to go down from there. Maybe it's just going to consolidate and then go back up again. I guess that's kind of what you've been explaining anyway. But
Yeah, and it's probably a much more appropriate way to use it. But in my experience, talking with traders throughout, 8 years now, that's not how it's used at
yeah,
all. And it's like it can't possibly be interpreted that way initially because it's called overbought, oversold when those
yeah,
signals are
it's a bit
firing. So
misleading.
it's
Yeah.
like you have to, and this is the case with every indicator, right? You have to actually use it and not just back test, but also forward test. Forward testing is the only thing that's actually going to provide any real value to you because, every indicator has this like ability to create like short sample sizes where it fools you into thinking that the indicator itself is alpha. But if the
Mm-hmm.
indicator itself were ever going to be alpha, then I wouldn't be talking to you right now. I would be on a private island and
Yeah.
on my mega yacht, right? Like I would be somewhere else, drinking something out of a coconut and enjoying life on a beach. The indicator is not alpha. It's the discretion of the user using the indicator. And the only way that you're going to be able to actually figure out what kind of signals to give merit to is by reverse engineering that process and figuring out what signals not to give merit to.
Mm-hmm.
So a key part when people ask me like, how are you going to trade trends? Ironically, it's not very difficult to say, hey, this market's going up. I think it's going to keep going up. That's not the kind of expression of like skill set or ability or like the epitome, the pinnacle of my abilities, right?
Mm-hmm.
It's actually the ability to adapt to ranges before they continue to range. So, like in November of 2025, I was able to say relatively early that we were probably just going to chop sideways before it became incredibly obvious to the 4-year-old. And I was able to do that with acknowledging how my trend trading system, which had previously worked beautifully and
Mm-hmm.
systematically in the sense that I could have presented it to you and uploaded it to Investopedia and used it as, trend trading 101, just do this for the rest of your life and you're going to make a shit ton of money. And it would have worked. It would have acted as that example because it was very fluid, it was very linear, it was very straightforward. There weren't any false positives that I had to really worry about. There weren't much nuance. There wasn't any discretion that was necessary. And then November 2025 hits and then we start to chop sideways before it becomes incredibly obvious to a kindergartner. I'm
Mm-hmm.
able to say, you know what, this is probably going to chop sideways because I'm now seeing my same system that just previously worked as alpha with not any discretion necessary at all. I've now watched it give two false positives in back to back.
Mm-hmm.
Hey, this is going to be a reversal. We're getting a nice rally, and then we didn't. And then we lose that trend. What that typically means is the rally failed, so we're just going to continue the downtrend amongst all time frames. And then we
Mm-hmm.
didn't. We found a higher low, and we've on a very low time frame, and then we got back above those same moving averages. So it's like, okay, what am I going to do? Am I going to keep going? Oh, I'm bullish again. Oh, I'm bearish again. Oh, I'm bullish again. Oh, I'm bearish again. That's silly. That's how you, no matter how much money you make in a trend, that's how you ensure that you always give it back
Mm-hmm.
all the time. And this is why, on one hand, it's so funny to me because on one hand, I have incredibly naive people that are like, no, you're not good. All you do is trade moving averages. That's so easy. And then on the other
Mm-hmm.
hand, I have quants that are like, no, you're not good because moving averages statistically lose. You are trading an unprofitable system. And here's the results to prove that. I can backtest it. I've backtested it. I have all the statistics. So which one is it, right? Like, is it I'm so like I'm not worthy of any praise because the moving averages are so easy, or is it
Mm-hmm.
is it that I'm unprofitable because moving averages don't actually work? I can't tell you. So it's
Yeah.
always going to be discretion of the user. You have to make sure that you're essentially the main goal is to not lose. It's if you can mitigate drawdown more, then what that does for you is it exponentially increases the like leaps and bounds that your portfolio makes when fruitful environments come where your system is actually rewarded to an uncanny degree. And then you get that projection tied onto you. Oh no, that's so easy. All you did was trade moving averages. You throw the 4-hour 200 MA on the chart and there you go. And you make a shit ton of money.
Mm-hmm.
Those periods don't matter if you don't know how to turn off that mindset. It ensures unprofitability long term. And that's
I
probably the
mean,
case with any indicator. It's not just moving
yeah.
averages. If you have an indicator that's available to you, you have to remind yourself that it's available to you and it's free. And so why would it ever possibly be free? Like it's so funny to me that in the previous bull market, people were selling algorithms. That was the like grift of the last bull market was here's this algorithm, copy the API, upload it to your exchange, right? Connect the API and it'll fire a signal and give me $2,000 and you can have this algorithm that's going to print money for you for the rest of your life.
And use my ref link.
Yeah, and use my ref link while you're out. Yeah, absolutely. That was the grift, man. What a fucking grift, because nobody thought to themselves, wait a minute, why are you selling me this algorithm for $2,000 instead of using it for yourself? And the reality is it's not profitable. It's very reliant on variance, and it's just, that's the case with anything though.
So your system now basically it's just you look at the moving averages, you look at the market structure, you do trend following trading, and then you just like trade with it until the signals basically don't work because we're in a ranging environment, and then you just like sit it out until we're in a trend again.
Pretty much, man. And the it's very fragmented. I look at the market like a puzzle. So think about the way that you build a puzzle, right? You don't just start grabbing two pieces and asking if they go together. You start with the border because it's obvious. So they have flat lines, they have flat edges. You always go to the border, you build that out first. Then you segregate by color schematics, right? When you're building a puzzle. So I do the same thing in the market. I start with the highest time frame that I deem relevant, and I assess what kind of environment are we in. So that's always going to be how I pertain context on lower time frames. So like not every 4 hour 200 MA's reclaim is built equally, right? I made a post about this while we were in that range in like November. So we had reclaimed the 4 hour 200s in like late December. And typically, right, that projection, all you do is trade moving averages. That's so easy. But that only works if we're in an incredibly bullish uptrending environment. Quants think that I'm so stupid that I can't tell the difference between an incredibly uptrending environment where things are favorable and a reclaim of high time frame moving averages equates to parabola, price discovery, turn my brain off, target the top right corner. Whereas in December, that's not at all what I said. I said we maybe get a nice 10, 15% relief bounce at most. We're probably going to put in a lower high on higher time frames. We're going to break back down below these moving averages, and we're going to continue the trend lower amongst all time frames. And obviously that's how that played out. So it's like not every signal is created equally, and it's always fragmented via time frame. So this like local strength that I'm seeing is relative to what's happening on higher time frame perspectives. So sometimes we reclaim a local trend, and to me that means we locked in a higher low on all time frames. We front ran all of my entries on, higher time frame inflection points, and the market's going to run it back turbo into price discovery without me. Sometimes we reclaim a local trend, and I'm like, okay, cool. We might see a nice 5% relief bounce before we die all over again, right? How do you gauge the difference between those two signals? Because they're the same signal. And this is a weird analogy, but I want you to think about this. When you have a baby, I don't know if you're a parent or anything, but when you have a baby, like I can attest because I have a sibling, and I'll go visit them, and my nephew will cry, and immediately his parents know what he needs. Hey, he needs a bottle. He needs to be rocked to sleep. He needs, food. He needs this. He needs that. He's overstimulated. Whatever, right? Like they know exactly what he needs. And I'm like, how the hell do you know? And they're like, when you're a parent, you'll know. And it doesn't make any sense to me because I'm like, no, it's the same cry every single time. I promise you, I've been here, I'm listening. Sometimes he cries and you guys go, oh, it's because he's tired. Sometimes he cries and you guys go, oh, he needs food, right? So how the hell do you possibly know? Oh, you'll know. No, dude, it's the same fucking cry every single time. It doesn't make any sense to me. And it's that context, right? It's, oh, well, he usually wakes up at 4 a.m. and then we rock him, we give him a bottle, whatever, he does his thing, and then we rock him back to sleep and he falls back asleep at 6, and then we wake up at 9 and he starts the day. But last night he did this, right? He woke up at this time, he did something different. So it changes things. So immediately as a parent, within a split second, your baby cries and you automatically know exactly what they need. Because in your mind, it's not just one signal. It's not just, he's crying. It's he's crying because this happened,
Yeah.
because, he just ate 30 minutes ago, so he probably pooped his diaper, right? Like, whatever. You're always pertaining it to the context. You're always making sure that that specific cry is a signal relative to the greater story that's being told, because you're a parent and you have to raise your kid. It's the
Hmm.
same thing. I know it's a weird analogy, but it's the same kind of discretion that you're using to gauge what is this signal that I'm seeing at face value. It's always going to be the signal all the time, every time. It's the same
Hmm.
signal, but it's not always the same outcome, and it shouldn't be treated the same. Not every opportunity is created equally, right? So it's like it doesn't make any sense to approach the market as if every opportunity is equal.
Yeah. I think that's
Yeah.
a good analogy, and I also think that's actually a very good argument for this argument that sometimes pop up. Like it popped up a month ago or 2 months ago, something that quants versus discretionary traders, which happens every once in a while, where the quant people are like, "Hey, don't trade discretionary. It's just like you can't do it. It can't be done. It's a waste of time. Blah blah blah." But I think that's a very good analogy, I guess, because as if you're trading discretionary, because of all the experience you build up in the market, you kind of have like a better ability to like judge signals. Because as you said, if you just trade the moving averages quantitatively, then the distinction between the strength of the signal is like way more difficult to do, or it needs like additional variables, or it's just like you can't, even if you're discretionary, you probably can't really like put into words every single variable that got into your mind that made you think like, hey, this is just going to be a relief bounce and not just like a continuation or whatever. And because it's kind of like an intuitive, unconscious level even that you build through all this time on the charts and the experience, and that's kind of like the art in discretionary trading, I guess.
Yeah. Yeah, absolutely. It's seeing the signal not work enough. Eventually your survival instincts kick in and you get tired of, getting baited by the same signal over and over and over again. Your gut wants to find a way to adapt. So you start refining the system. You start finding ways to give less merit to things, and what that inherently creates is a way to give more merit to the signals that you deem more noteworthy.
Mm-hmm.
So it's the same thing as like like I'm not exclusively a trend trader in the sense that I'm unwilling to go against trends at all. I actually, my only noteworthy trade as of the past 4 months, I've taken a bunch of trades in the past 4 months, but there's one trade that has dictated 95% of my profit from the past 4 months
Mm-hmm.
of trading. And it was buying the exact Pico bottom on Bitcoin and selling around 71,000 just
Mm-hmm.
recently. But the only way that I was able to actually dabble in that kind of approach was by respecting the trend. So
Yeah.
this is what I mean when I say cure causes, don't treat symptoms. If I'm going to try to be cutesy and scalp long or scalp short, on the way down into 60,000, I'm probably going to make it to where when we get to 60,000, I don't have the luxury of asking myself, okay, we're finally accelerated. This is exaggerated. We're probably going to see like a more mechanical kind of bounce from the market reaction from this general region. Where at this point we're down, negative 20% in the span of like 12, 16 hours.
Mm-hmm.
So do I think that maybe this is noteworthy enough to start probing against it? Yes, I do. Anyone can look at that silver chart at $120 and say, you know what, this is probably getting out of hand, right? But you
Mm-hmm.
have to allow yourself the luxury to make that statement. The only way that you're going to be able to make that statement at $120 is by not making it at 80, right? It's like you have to be able to dwell in a primary mindset, and then what eventually happens is you're allowed to speculate more in a secondary term.
Mm-hmm.
So and that's kind of the like essence of my entire approach to this market, man. I wasn't, in Solana, like meme coin mania. It's not like I was trading every, 75th iteration of Geo Bowden and Chill Guy and Mudang, and like, dude, I missed out on like pretty much all that stuff. Like I
Mm-hmm.
maybe caught a very, 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 very small percentage of it. But then Trump coin got created and I was late to it, in the sense that like by the time that I saw that it had gotten created, I was already 2 hours late. The coin itself was at $5 billion market cap.
Mm-hmm.
I go scroll my Twitter timeline. I'm like, dude, is this real? Like, what the hell is happening? And I see that a lot of the FUD that people initially took on, like the 80%, ownership of like the wallet that launched it and this and
Yeah.
that, and all this FUD, like people debating whether or not it's even real or whether Trump got hacked or whatever. A lot of that FUD had been mitigated at that point. And so then I'm scrolling my timeline and I'm like, okay, everyone's kind of overcomplicating this and is like, hey, this is a scam. I can't believe he did this. This is, extraction, blah, blah, blah. And I'm like, I thought about that quote 5 times a year, there's free money on the floor, just pick it up and do nothing,
Mm-hmm.
right? And I'm like, the US president just made a fucking meme coin. What is the better example of free money on the floor, pick
Yeah.
it up and do nothing? So I was like, okay, I'm gonna send everything to this, Phantom wallet, capitulate all the positions that I had, whatever stupid meme coin bags that I was holding that were down and whatever,
Mm-hmm.
and consolidated it and just market bought Trump coin. And by the time it took me like 10, 15 minutes to do that, right? To like scroll
Mm-hmm.
Twitter or whatever. And by the time that 10, 15 minutes had gone by, it was at 7 billion market cap. So it was
Mm-hmm.
just like continued ripping. I was like, you know what, man? It either goes to zero or I think that I'm a genius tomorrow and it does a 10x. I wake up to a 10x, and that's what
Yeah.
happened. I woke up to a 10x and I sold for 10x. I sold at like $70 billion market cap, and
Good
never
timing.
touched it again. And it's like, it's not like I was dwelling. It's not like I was trenching, right? Like I wasn't sitting there and, waiting for these opportunities. It's not like I was praying on Trump to make a meme coin or anything. It's just, it fell into my lap.
Mm-hmm.
It's you abide by a very hard set philosophy, this primary approach to the market that that you have some kind of strength or edge in. And eventually what that allows you to do is dabble in a more secondary state where essentially the market hands you free money and there's not really too much that you need to do with that in
Mm-hmm.
order to make the most out of it. That's the beauty
How
of crypto, man. That's the
how
same
do you
thing with like
oh
NFT
no, go
cycle.
on.
Sorry. Go ahead.
How do you decide which assets to trade? Do you trade like any TradFi assets as well?
Yeah, I started trading stocks again in November. I've done sufficiently well, but I can't say that I'm in sync with the stock market just yet because
Mm-hmm.
I was coping pretty hard. I watched pretty much every stock, go parabolic in the past like 2 or 3 years.
Yeah.
I think I stopped trading stocks in like, I want to say like April of 2023. I had this like amazing Amazon trade where we broke out of the 200 dailies coming off of those like 2020 lows or
Mm-hmm.
2022 lows. And I held that trade for like 4 months and I got like a 5R from it. And I was like, okay, this is stupid.
Mm-hmm.
And so ironically, like winning a trade on Amazon was what made me want to like not trade stocks anymore. Cause I was like, my capital is probably better, put towards like crypto. So I
Yeah.
consolidated it more, and that obviously didn't really pay off because, a lot of tech stocks and whatever went absolutely berserk.
Mm-hmm.
But yeah, I started trading stocks again. When it comes to like asset selection, I'm 26 years old, but I typically have the mindset more of like a boomer in the sense that you're not going to find me trading like the shittiest of shit coins.
Mm-hmm.
If it's too low market cap, even if it's like good market cap, but like Bitcoin Cash, for example, dude. Bitcoin Cash had like a crazy like outperformance, relative strength prolonged in the crypto market for like months at a time not too long
Mm-hmm.
ago. And I was like, yeah, I'm not touching this thing.
Yeah.
Tron, for example, right? Like one of the assets that I probably have like PTSD from because of 2018.
Yeah.
Tron, for example, I was like, ironically, Tron's been one of the best performing assets throughout this cycle.
Mm-hmm.
You look at that chart, it's mostly just like up only. But it's because it's being manipulated, and we all know that, right? But it's like, it is what it is. It doesn't mean that you can't jump in and make money via trend trading systems. It's
Mm-hmm.
actually coping and complacency that I'm not doing that. But I accept that. I know damn well that it's cope and complacency. And, I'm just going to abide by like the market is the epitome of freedom. I use that to my advantage.
Mm-hmm.
That's the way that I look at it. Is that my way of coping? Absolutely. That's my way of saying like, no, I'm not an idiot for missing out on an obvious 3-year uptrend on Tron or like,
Yeah.
missing Zcash or Monero or whatever. I do that stuff all the time, but I'm very much a boomer in that sense when it comes to asset selection.
How do you deal with the FOMO from missing these runs?
Dude, I just remind myself that like Zcash or Monero, for example. Okay, I missed out on a multi-100% rally.
Mm-hmm.
Add it to the list. Like, of all the multi-100% rallies that I've missed out on, add it to the fucking list at this point. I missed out on Axie Infinity in the last bull market cycle. I missed out on Shiba. I missed out on Floki. I missed out on stuff all the time. Like, who cares? Like, if you're always focused on the opportunities that you missed out on, you're not going to be able to realize the opportunities that are going to come your way. So that's the reality of it, man. I just think, it's part of my lore at this point. I missed out on this so that when this got presented to me and I could catch it, I wouldn't fuck it up. I wouldn't screw it up. And I would make the most out of that opportunity, because I know that I don't find myself in those situations as often as I'd like to. And the reality of bull markets, man, is that, you're always going to miss out on more than what you catch. That is inherently always going to be the case. You cannot possibly, distribute yourself across the board to catch every single opportunity, to catch every rotation, every narrative, every sub-narrative, every 175th iteration of, AI meme coin slop on Solana, on chain. Like, you're not going to catch all of it anyways. So who cares? Like, the way that I get it across to crypto people is like, one time, people were like asking me, because Bitcoin went up like 5% in like an hourly candlestick, and people are like, oh my God, this move, like, this is crazy, what the hell? And, people have, this emotional attachment, this bias towards Bitcoin. So when Bitcoin does a 5% move, they feel some kind of way about it. But that same exact day, Tesla had gapped up on the day like 30%. I'm like, wait a minute. You guys are profit maximalists, right? When I go check your Twitter bios, you all have profit maximalist in your bio, but you're freaking out that you missed out on a 5% move on Bitcoin, but you're not freaking out that you missed out on a 30% move on Tesla.
Yeah.
Something ain't right here. Obviously, you're not a profit maximalist, right? Like, you're a pansy and you're worried about 5% moves on Bitcoin. It's the same concept, man, but it's like, if you're going to sit here and dwell on, oh, I wish that I would have caught that opportunity, like, you're just going to add yourself into the list of like perpetual pessimists in markets that lose and that vindicate that exact same mindset constantly in their own heads. And it's not going to do you any good long term for the next opportunity. Like, we talk about, I bring this up a lot because I feel very hell-bent and adamant on this perspective. This bull market cycle, people will tell me it's underwhelming. It's the worst bull market we've ever experienced. Dude, I retired my parents this cycle. The same way that I had to express humility in 2018 and say, you know what, somebody was able to capitalize off of my demise. Why can't that be me? Yeah. I want that person that's thinking this is the worst bull market ever. I want you to think that to yourself, because if you're not going to make it in markets, and you have no business trading. Yeah. That is the epitome of trading, is that I am better than you. If you can do that, then so can I. So express that belief, right? Don't allow yourself the ability to look at this bull market and say it's the worst bull market ever. If you're a trader, you're not allowed to do that. That goes against every single, fundamental belief that you have when you say, I'm a trader and here's what I'm coming into the market to do. Someone else was able to capitalize off of your poor experiences. Why can't you do that regarding someone else's poor experiences? Yeah. Right? And it's like, if you want to sit here and bitch and moan about 2023 and how Bitcoin didn't get to $250,000 or altcoins didn't rally across the board or whatever, just remind yourself that in 2021, people said the exact same thing. People always, it's so ironic to me, because it's like, were you guys here? Because in 2021, the cycle that we compare to say that this cycle sucked, the cycle that we compare to, I clearly remember people being underwhelmed that Bitcoin only got to 69,000 and not 100,000. Yeah. I clearly recall people saying, how come altcoin layer ones are rallying but not my altcoins? How come DeFi coins are rallying but not my DeFi coins? NFT mania doesn't count because it's so obscure, it's so odd, it's basically gambling. Yeah. Right? Like, It's the same shit, right? We're talking about it's the same kind of dynamics that get applied in markets all the time. And so if we want to keep going, I keep clearly recall people saying in 2020, 2021, oh, well, I didn't have a chance to buy Bitcoin at $1,000 like people did in 2017.
Mm-hmm.
Well, don't you think that people in 2017 said, "Oh, I didn't have a chance to buy Bitcoin under 100 like the people in 2014." Like, we can keep going, dude. I didn't have a chance to capitalize off of the 2008 recession. I didn't have a chance to capitalize off of the dot-com bubble. I didn't have a
Mm-hmm.
chance to capitalize off the 1929 Great Depression. Like, who fucking cares, man? Like, be a man, like, or a woman, and pick yourself up and start moving forward instead of looking backward. You're gonna sit here and sulk about an opportunity that you missed. That's the
Yeah.
exact same kind of mindset that ensures that you're gonna miss the next one. Have fun, enjoy, right? Like, if you want to keep doing that, it's easier to continue down that pessimistic path than it is to actually do something about it and change it. So much easier.
Most people aren't actually trading though. Most are just like hanging around and then waiting for it. That's why people are so addicted to alt season, because it's like they just want everything to go up again, to be easy, and also because why bear markets are so devastating. Because even though you can make money on the downside, most people just like never even comprehend
Right.
that. They just want to buy stuff and make lots of money from it. And then when it's like getting less because the asset class matures and people are like, hey, this is stupid.
Yeah.
But yeah, it takes effort and skill. It doesn't just like fall into your hands, even though it did in the past, like sometimes. But then you also have to like go there and seek out the opportunities and be there at the right time and whatever. Like you have to do something. It's just you're not just gonna get
Yeah.
rich by doing nothing.
Yeah, absolutely, man. And it's like we also have a poor perception of what 2021 was like, because people look back and summarize it as alt season equals everything went up at the same
Mm-hmm.
time all the time. And that's not at all what happened. It was DeFi summer, because if you weren't holding DeFi coins, you were not having fun.
Mm-hmm.
It was altcoin layer ones. It was Solana, it was AVAX, it was Harmony, it was this, it was that. And if you weren't holding those assets, you weren't really having a great time. It was Ethereum-based narratives, because Ethereum was rallying. So any kind of like Ethereum beta, like Ethereum Classic,
Mm-hmm.
ENS, et cetera, Uni, right? We're all doing well. Like, it was that. It was sub-narratives within a greater bull market. So when people look at me and say, "Oh yeah, you only did well in this bull market cycle if you were skilled."
Mm-hmm.
Oh yeah, you mean just like every other bull market ever in existence? Like, yeah, you only did well if you were skilled, if you had some kind of, ability to ride narratives or foresee
Yeah.
catalysts or adapt to trends or, rotations or whatever. Like, yeah, you're only going to do well in markets if you're skilled, or if you're investing in assets that historically go up long term and you have some kind of sense about you. Hey, I've been accumulating silver for 15 fucking years as it's underperformed inflation. Now it's dramatically outperforming inflation in the span of 4 or 5 months and
Mm-hmm.
trading, parabolically. Maybe it's time to cash in on all my hard work from the past decade. Like, yeah, yeah. So unless you're skilled and good at markets, then, you're not going to do well in markets. You mean just like any other venture, any other endeavor in the world ever. Like, and then people go, "Oh yeah, but it was so much easier to make it in crypto in 2017." All
Yeah.
that really means is the skill set, the par level was lower. But what you don't realize is the par level was the par for the industry that it was at the time. So
Mm-hmm.
like, compare this to, and it doesn't matter when I say it, but as soon as Kobe comes and says the exact same shit that I'm telling you right now, all of a sudden it makes sense to people. Where
Yeah.
Kobe is like, "Oh yeah, it was so easy looking back in hindsight, but what you guys don't realize is Bitcoin going from $16 to 100, right? Like, we all thought that was like the craziest thing ever. Everyone's
Mm-hmm.
capitulating, everyone's, it's bull market mania." So you're holding people to a certain standard for what the skill set is at the time. And when you compare this and when you analogize it, I don't know if you know anything about like NBA basketball, but I've never heard a single fucking NBA enthusiast say that Bill Russell is the greatest basketball player of all time. This guy has 11 championships, but
Mm-hmm.
he played when, NBA basketball was like first coming up, when it was incredibly
I
early.
see.
He was
Yeah.
basically one of like the tallest people in the entire league, and he was playing against high school janitors essentially, and he was
Mm-hmm.
like this like Goliath of a guy, and he won 11 championships. And when you ask people who's the greatest basketball player of all time, the next player to, like, in terms of championships, not even close. They
Mm.
talk about Michael Jordan or LeBron James. So yeah, it's an evolving industry where the skill set gets greater because it's more materialized. It's more developed. There's now veterans in an industry. Not everybody's playing on an equal playing field in the sense that everyone's just as clueless as each other anymore.
Yeah.
People have picked up on things. There's algorithms that have been developed, and it's innovative, right? And you have to adapt. So now it's harder to get into the NBA than it was 70 years ago. It's like
Yeah.
just like any other industry in the world, man. You're not going to be good unless you're good. I don't know why people are shocked by that.
I think that's a good point to wrap it up on. But yeah, very very true. Also, I'm like kind of sitting in the dark here because I forgot to turn my lights on before. But so, do you have any final, like? You already dropped a lot of wisdom, but do you have any final words that you want to share with people before we say goodbye for today?
Final words. There's nothing new under the sun, man. There's nothing new. There will be another bull market again. At the highs, people ask if, there's ever going to be another bear market. And at the lows, people ask if altcoins will ever see another bounce ever again in existence. And the reality is you need to stay level. You need to remind yourself that even at the highest of the highs, you're not allowed to be in the clouds. And at the lowest of the lows, you're not allowed to, dwell in that valley. So just stay level, stay grounded, approach the market objectively, do your best. You're not going to catch everything, but there's more opportunity coming your way than what you've seen thus far. And that is perpetually the case, no matter how old you are, no matter, I mean, seriously, man, like where you're at in your crypto journey, your trading journey, your markets journey, even outside of markets, that's the mindset that I would beg people to carry with them into anything in life.
Yeah.
So, perpetual optimistic, and the greatest way to express abundance and yield abundance is to start maximizing your gratitude for what you already have. And then I genuinely believe that the universe finds a way to reward you with abundance thereafter. And you kind of create that mindset for yourself. It's not really so much that the universe hands it to you. You kind of manifest your own reality, right? So yeah, there's nothing new under the sun. There's going to be better days. You just wait for it. And yeah, good luck.
I completely agree. I think that's very good. A very good statement, especially considering all the AI doomerism and whatever that we have right now.
Absolutely.
I don't want to get into that too much, but I think this is a good way to think, and you should think more like that. Whatever you see on social media, and yeah, thank you very much for coming on today. This has been a very fun time.
Yeah, thanks for having me, man. I appreciate it. It has been fun.
Of course. Goodbye, everyone.